Hello, everyone. First of all, on behalf of the Macedonian Actuarial Association, I would like to thank the organizers for inviting me on this conference to give this presentation that Renata and I conceived. The topic of this presentation is how can an actuary add value in emerging and developing markets? Well, since knowing that the Central and Eastern European region consists of mostly emerging and developing markets, I think that this is the right topic and this is the right place to talk about this topic. Before getting onto it, I would like, since we heard some valuable information about the Actuarial Association of Europe, I would like to ask Renata to give us some information about the International Actuarial Association. So please, Renata.
So how is this working? I'm push? Okay. So the first topic I would like to present, and which which was added this morning after my conversation with Maria during breakfast, is the presentation of the International Actuarial Association. Because this is the mother association of all actuarial associations. The International Actuarial Association was created in 1895 in Brussels. So I'm very proud about it as well, being a Belgian, Karel. And it was created by the Belgians, the French, and the British Actuarial Association. Until 1995, the Secretariat was based in Brussels, and then we lost it to the Canadians. Why to the Canadians? To please our French colleagues, because Canada is bilingual English-French. It's a non-profit, non-political, non-governmental organization. At this moment, we have 72 full member associations, 29 associate member associations. We have also institutional members, such as ISP, OECD, ISA, IOPS, ILO, and recently we also signed a memorandum of understanding with the IIS. We have also observer members. These are mainly the development banks, such as the Asian Development Bank. And then we have those members that we like most, the benefactor members. At this moment, we are about 74,000 fully associates. Amongst the associates, we have fully qualified actuaries. And we have about 800 volunteers around the world. This is the structure of IA. It may look complicated, but let me explain you a little bit about it. We have a council, and in the council we have the presidents of all the full member associations. They meet once every 6 months, somewhere on Earth. We like to travel, so next time we go to Berlin. Recently we were in Chicago, we were in Budapest. Every 6 months we meet. The council meets, the committees meet, the work groups meet, etc. So, as Maria has presented the Actuarial Association of Europe, I would like to tell you that the Actuarial Association of Europe is an observer member of the IA. Why? The International Actuarial Associations only accept national associations and not regional associations. So per country we have one association. Sometimes we make an exception, such as, for example, Bosnia-Herzegovina and the Republic of Srpska have 2 full member associations. So here you have the structure, you have the council, you have the executive committee, and then you have all the committees. And the committees are doing the work. On the committees we have volunteers. And again, to show you how AAE, the Actuarial Association of Europe, and IA are, they are working closely together. John Martin, who is member of the executive board of AAE, is also the chair of many committees. He's the chair of professional committee of the IA. Mark Stocker, member of the board of AAE, is a vice chair of the education committee, which explains immediately that when we are talking about the IA syllabus, we are talking also about the EAA syllabus, because we are, it's one big family, IAA is setting the standards, and at this moment, the Actuarial Association of Europe is taking over, and sometimes is even more rigid than we are, right? Especially with respect of the syllabus. The International Actuarial Association is an association of associations. However, we have sections, and there individuals can become a member. So we have 6 sections, Aston for non-life, then we have a section interested in ERM, enterprise risk management, then we have a section of a section for the consulting actuaries, for health, for pension benefits, social security, life, and AWB. That's where I am. AWB is a section of volunteers. Qualified, fully qualified actuaries, usually quite senior, who are volunteering worldwide to help to develop the actual profession. And so here in this part of the world, we have undertaken several AWB seminars, and I listed them. I hope I don't forget anybody. We organized seminars in Albania, Bulgaria, Macedonia, Republic of Srpska, I hope I pronounce well, Romania, and then, well, a neighbor of you also, Russia. So we are quite active in this part of the world, and so since a few years, we are also helping the Financial Services Volunteer Corps, because the Financial Services Volunteer Corps is using experts from AWB to train, to set up syllabus, etc. So you see, we are one big family, it's one big actual community, and we try to help to promote the actual profession worldwide. I just wanted to add this on IAA. After the nice presentation of Maria, I think you need to have the whole picture, so IAA is there. If you need more information about us, then please let us know, and we can talk over both or during lunch. So a few, you know, I would like to make some publicity about IAA after Maria's talk. It's normal, right? So we have an advice and assistance committee, which is the committee which is helping young nascent associations to develop and to promote the profession. We organize regional seminars. What is a regional seminar? Well, IAA is organizing regional seminars in Africa, Eastern Europe, Asia, Latin America, together with a hosting association. And very soon, Karel is going to be with us as a keynote speaker during the 5th African Actuarial Congress, which will be held in Casablanca. We also provide webinars. Like Maria said, we are also providing webinars, and now we are preparing a webinar on professionalism, which will be addressing the needs of small nascent associations in developing countries. We cannot all the time send people over. We need to be more efficient, and so we organize quite a lot of seminars as well. Please look at our website. I didn't have the time to, you know, to add all the slides like Maria, but please look at our website. So now it's, I talk too much, and I know that you're all very hungry, so I hand over to Vladimir, who's going to give us a few more detailed statistics about the region and where you stand.
Thank you, Renata. Well, first, in the introductional part of the presentation, we're going to take a look on the Central and Eastern Europe markets. We have taken 10 countries, and we can see that the structure of the level of economy development according to IMF is very heterogeneous. So we have developing countries, we have emerging countries, and we have developed countries. So but most of the countries, with exception of Slovenia, Slovakia, and the Czech Republic, belong to the emerging and developing markets. The EU members are having the Solvency II regulatory regime already in place, and the non-EU countries, which belong to the Western Balkans, who have perspective of joining in the EU in the next period, are having it as their medium-term obligation to adapt with the EU regulations. In terms of some insurance parameters like insurance penetration and density, we see that the developing countries have a penetration of 1 to 2%, and the emerging markets are somewhere between 2 and 3. While yeah, we have Slovenia, which is high above, with almost 5% of penetration, and also with a very high density, insurance density.
I cannot move forward. We are just actuaries, you see. Voilà, there it is.
So in terms of actuarial associations, we can see that almost most of the countries, their status of in the International Actuarial Association is a full member association. A full member association means that the fully qualified actuaries of this association have an education which is compliant with the IAA syllabus. They have code of conduct, established code of conduct, a disciplinary procedure, and also it's most of them are having standards of practice in place. As we can see, the years of attaining this full membership status is about from 2000 and 2010 for the emerging and developed economies, while the developing markets, the association from the developing markets have attained this status after 2010, with Macedonia as the last country, national association which attained this status in 2016. As for the number of fully qualified actuaries, I must state that this is according to the data on the IAA, from the IAA source, and which is published on the IAA webpage. And it complies with the criteria that IAA is requesting from the fully qualified actuaries. So now we are going to have a comparison between the emerging and developing and mature insurance markets, and that is where Renata will say something more about the mature markets.
Well, thank you, Vladimir, but Vladimir forgot something very important to tell you. If you look at the density of actuaries, then Slovenia is number 1, and then Macedonia. So let's, give a nice, it is a nice achievement, because the Macedonian Actuarial Association became only a full member association in 2016, while you are there already since many years. And I understood from our conversation that if you are going to, provide more seminars, then in very short term, you will have 100 fully qualified actuaries more, which is quite an achievement. Okay, so let's now talk about the differences between emerging and developing markets and then the developed markets. What makes the nature of emerging and developing markets different? Well, I have pointed out there some areas where we can definitely say that this is where it makes a difference. So, for example, if we look at the nature of insurance risks, risks are different between developing and emerging markets and developed markets. This is also due to the fact that, the volume of the business is lower. It's due to the fact that the risk profile is different. We have more uncertainty, and this is mainly due to the environment, economical environment, the political environment. It's also due to the fact that data are missing. There is no history. The governance is also different. We can say, without blushing, that in emerging and developing markets, governance is less developed. We have simpler regulatory regimes in developing and emerging markets. Look at Solvency II. Most of the emerging and developing markets are still at the Solvency I regime. And let's put it clear, and I would like to repeat the words of Jonathan Dixon. Well, you need first to develop actual skills if you want to have Solvency II. In French, they say, on ne peut pas mettre la charrue avant les bœufs, for those who speak French. Then another area where the emerging and developing markets is different is with respect of the investment markets. Well, we can see that in emerging and developing markets, insurance companies, well, they tend to invest too much in property because there is a less developed investment market. And then last but not least, we have a skills shortage. And that's why we are here. We want to build actual capacity, because this is really what is necessary in emerging and developing markets. Now, what does it mean for an actuary in emerging and developing markets? Well, it means that there is more uncertainty. It means there is more risk and perhaps also more opportunity. And it means also that we need more strong actual involvement in those markets. What is the role of actuaries in mature markets? Well, in mature markets, we have traditional actuaries and we have business actuaries. What are traditional actuaries? Well, traditional actuaries are doing the traditional stuff, they are doing the traditional technical stuff. And they are often specialized in life or in non-life. They are more technically focused. Some examples of what they are doing pricing, reserving, they are calculating the risk-based solvency capital requirements, they are doing ALM, and they are looking at risk management practices. This is a traditional actuary. In mature markets, we see, however, an evolvement. We see that actuaries tend to play a role in business. And this afternoon, Octavia from Romania is going to talk about that. Again, I have a problem. Okay. So in mature markets, we see that the traditional actuary is evolving to a business actuary. And we see that the actuary is playing a broader role. I only have 5 minutes. And we see that in developed markets, many actuaries are having key senior positions. And this is what we are all dreaming from, being an actuary. Now, what about actuaries in developing markets, in emerging markets? Vladimir, this is your part.
Yes, since Macedonia is a developing market, then we can have a say here. Yes, the general perceptions of actuaries in the emerging and especially in the developing markets is a lack of understanding, a general lack of understanding of what we do. Not among only the general public, but also among the people who are in the industry. There is a belief that our skills are limited to technical or compliance skills, and that we're just some calculators which are locked in a room and do some ununderstandable calculations. And also the market does not appreciate the potential value that the actuaries can deliver to the business, and are considered in general as a cost to the business instead of something that can add value. So, since this is the current situation on the CEE markets, in the developing and emerging markets, the question arises if this is the most exciting time for actuaries in the history of the CEE and SEE markets. So I think that Renata, who has gone through many different markets and stages and have seen this path of development of the actuaries, can give us an insight on this.
Vladimir is not playing a fair role because normally he should talk about this, right? Because you're working in an emerging market or a developing market. So yeah, I think that all those actual professionals should stand up and make it happen. Because, well, this is really what what you need to do. You need to promote yourself. You need to promote yourself so that people in the organization know that, well, you're not only there to calculate. You can offer much more. You can add value to the organization. So here, I have listed quite a few examples where the young actual professionals can do something to make it happen. So as we are lacking time, my compatriots told me that we have to stop. I invite you to look at those two slides, which may give all those actual professionals here some ideas how they can improve their position within their organization. And so here on this slide, I pointed out for a few areas where you can start immediately, where you can start when you return. And I would like to look at one area which is quite important. It's the expense allocation. Actually, when actuaries are doing pricing work, they should look at the expenses. And what do we see in developing and emerging markets? That this is a domain which is purely reserved to accountants. So when you return to your company, I would invite all those actuarial professionals, to promote themselves and to look especially to this part of their work. Actuaries should be involved in more accounting work, in analytical accounting work, so that they can better price the products that they are offered. There are many other domains where they can immediately change their position in helping the organization. Domains like risk management, risk-based capital calculation, claim analysis, financial condition report writing, something where Karel pointed out, well, sometimes it's a CFO or the CRO who is presenting the report, but actually it's the work for the actual professional. And I don't want to use actuary, because I don't like the word actuary in emerging and developing countries. I prefer the term actual professional. And I think most of us are actual professionals. So when you go home, when you return to your company, please look at those slides and pick up a few of those hints that we give you and work on it, go to your organization and make it work. Change the image of the traditional actuary. We are not just calculators. We can do so much more to add value to all the stakeholders in the company. Well, I think that there will be questions after lunch. On behalf of Vladimir and myself, I would like to thank you to invite us, to give us the floor, and we are there to answer all your questions. Thank you.
Thank you very much.